I'm here at the Peterson Institute with Nicolas Véron of Bruegel, and we have some questions to you about the big news of the week, which is the threat of the U.S. government shutdown and the extension of the debt ceiling. Can you explain what was the meaning of this political crisis in Washington, the fight over the debt ceiling and the shutting down of the American government?
Well, I think the simple way to summarize it is that the US is very much at the core of the global financial system, and this includes Europe. So there's no way that Europe could possibly ring-fence itself from the US and its role in global finance. And that means that the US Treasury securities, Treasury bonds are the reference asset, supposedly risk-free asset in the global financial system. And when the risk-free asset becomes not risk-free, and specifically in risk of defaulting, this is very disturbing and destabilizing for the global financial system. So Europe, in a way, is not the most directly affected because there are even bigger holdings of US Treasury bonds in Asia, in particular through official reserves. But Europe would have been affected by the turmoil and instabilities that would have resulted from a default. And therefore, this was incredibly important to Europe because even so the risk of this happening was small, the consequences, if it had happened, were so vast that this had to be taken with a great deal of attention. Now, obviously, there is a temptation in Europe. I think Olli Rehn said this weekend that there was no Schadenfreude in Europe. There is a temptation in Europe after having been berated by the US for a number of years for the dysfunction of European institutions in managing the Eurozone crisis. There is a temptation to say, look, we're dysfunctional maybe, but the US is even more dysfunctional. And that may be fair, but ultimately, I think we also have to put things in perspective because the US debate is very vocal. Things are debated very, actively with a lot of shouting and yelling. But I think it remains the case that the US was far from default, whereby in Europe, one of the Eurozone member states, Greece, has de facto defaulted on its domestic debt. So I think we have to keep this sense of perspective.
Now, after almost 3 weeks of debate, the U.S. Congress finally reached a deal to at least keep the U.S. government open for about 90 days until the beginning of the new year. Can you give me a little bit of analysis of this deal?
Well, the first remark is that, of course, the media will paint it, or is painting it, as the U.S. government reached a deal at the 11th hour, right, at the last minute before a default. That's actually not the case. If you look at what the real deadlines were, the deal was reached well in advance of the very last minute. So we were not near the point of potential collapse. And I think this also is important to keep in mind if you want to keep things in perspective, because even compared to what happened in 2008, in early October 2008, where the US Congress rejected the first version of the troubled asset relief program, the TARP, and therefore sent the markets even more downwards than they were before, we're not at this point of really near the abyss in this episode. Maybe we'll get there in the next episode, and that's possible, but maybe not. So we're not, the distance to default, if you want to use that vocabulary, has been kept relatively large so far. Now, you're right to say that it's very possible that this problem hasn't been solved permanently. And I think this very much is related to the dynamics inside the Republican Party. But I think time will tell whether this crisis will either basically not come back, which is possible, or come back the same way, which is possible too, or come back even worse, which is also possible. So at this point, I wouldn't choose between those three forecasts because I think it depends on political developments inside the Republican Party and within the Republican supporting voter base that at this point I'm not able to predict.
Now, U.S. President Barack Obama has already said that this political crisis has caused unnecessary harm to the U.S. economy. Do you agree? Did it impact the European economy? Was there impact on the global economy?
Yeah, I think this is a fact. I mean, this back and forth on the fiscal issue has held back private investment in the US. It has had very limited limited fiscal impact per se, but it has to be put in a broader context that includes a sequester, that includes fiscal adjustment in the US, part of which is actually welcome, but which has been done in a very sort of clumsy manner. And obviously, if this cycle was to come back, which is a possibility, it could have even further negative impact. So yes, this is bad for the global economy, it's bad for the US economy, it's bad for the European economy, all things equal. Barack Obama, after S&P downgraded the US a bit more than 2 years ago, said whatever a rating agency might say, we're a AAA nation, we're a AAA country. I think actually, well, not with all due respect to the president, after the past 3 weeks, I think it's debatable whether the US is a AAA country, and actually it's very possible that the second major rating agency, Fitch, would downgrade the US the way S&P has done. Not to put too much importance on the judgment of rating agencies, which have been seen as failing in the past and will fail again in the future, but I think it encapsulates something. Basically, there is a bit of an erosion of the bedrock of trust that the rest of the world could have in the sanity of US fiscal management, and this erosion of trust will not be repaired anytime soon.